Welcome back to my morning report on Tuesday, the 8th of December, with me, Rich Perry, market analyst at Antec Markets. Let's look at dollar yen. We're still in this trading range, aren't we? 22.20 towards 23.67. It's just backed away from the highs of the range again. We've had this Japanese data out overnight. The GDP looks like it's been upwardly revised, and Japan was no longer looking as though it hit recession again. So that sort of takes the edge off the drive towards further quantitative easing in Japan, and that's seen the yen strengthen slightly, sort of 30 ticks really, nothing too significant. But I still think the technicals on this chart would suggest we're waiting for an upside breakout, and I think this little dip could even give us a buying opportunity. Still seeing the RSI finding support nicely above 50, that's positive. MACD line still above neutral, that's positive. Stochastics rising and actually beginning to accelerate a touch, even though we're lower today. Interesting. That's positive. Looking at the range, we have got this pivot level within the range, 2270 around about, seems to be a pivot level in this range. So that is your first line of support. So we just backed off the highs. We're sort of 23 figure area. So you're just not far away from that pivot, but I still think this this pivot could be a nice little buying opportunity if we see it. You're still seeing the sort of momentum indicators within the range. Momentum indicators suggesting that we are still range bound, so not far off the bottom of that. So 30, you're now looking for your next buy signal, I think, and I think that the next buy signal could well be the one that tests the top of the range. So I would say that we're looking out for the possibility now of a reaction to the downside that's going to be finding support and then testing the higher of the range again. At the moment, you've still got to say you're playing within the range, but I'm as I said in the morning report, I'm a little bit apprehensive about shorting within this range because of the strength of all the technical indicators. All the daily technical indicators suggest that there's going to be an upside break of the range. So that would suggest that sort of trading against that outlook, i.e. selling within the range, is a risky play. I'd be preferring to use the little corrections as buying opportunities and play it in that way towards sort of testing the highs of the range. So using this little minor reaction to the downside today as a chance to buy. So with that in mind, I wish you good luck in your trading today, and I will speak to you later. Thank you.